Hi, morning, guys. Johnny and Mr. Forex Fire. A little bit later getting to the charts. Preschool run stuff, kids' nightmare to get ready. However, let's head to the chart. We'll have a look at the London session. Right, so this was the bias off yesterday. We came into what we were seeing, the imbalance, the FAG, and it tanked from there. So it was a pretty good analysis. However, Euro USD, let's take a look at the currency strength. Euro is 57, USD is majorly strong, so we could be getting a bearish sentiment, very much so, with the USD being strong. We can see we came out the Asian high and the London. Okay, so it looks as if we've missed an entry already. Uh, so you would have went from here down to this bit here. The 15-minute setup, it's come back and touched. So you go into the 5, okay. We stretch this back along. There's the separation candle. There's the 50% touch. So it looks like we have missed a trade. So when you're looking for a sell, okay, there's a touch. When you're looking for the sell, you're looking for a bullish candle followed by a bearish engulfing. Okay, so that's what you'd be looking for on the 1 minute. This here, that's where the touch was. Let's take a look. There's a bullish candle there. Okay, the one next to it is bearish engulfing. So you would have gotten in on a sell on that candle close. You would have gone for a 1 to 2. And again, you could have been conservative and had it up to here. You would still be in the trade. However, we see we go above the recent highs. So we've got highs, lows, lower highs, lower lows, lower highs. So it would have been above this one. You would have went for a 1 to 2. And there we are, guys. There would have been a 2% winner today. Unfortunately, I've missed it due to the kids being later getting up, but that doesn't matter. 2% winner on that. The GU, let's go at the 15-minute on here. Let's just take a look. We have spiked out. Okay, we have spiked out. The GBP, again, it's pretty strong, to be fair, GBP and the USD. However, we spiked above the Asian high and we'll come from here down to this. I necessarily wouldn't have gotten into this, to be fair, because you want to see displacement coming back through. So for me, I wouldn't have gotten in on anything on this or even entertained the fact that I'm going down to a 5-minute because there wouldn't have been any sort of displacement candle. However, let's have a look at the card. The card at the minute, we are just starting to break above the high of the Asian session. Okay, so let's have a look at the strengths. Cards pretty strong. JPY is weaker, so this is telling me it is a little bit bullish at the minute, hence why the card is stronger. We're just going to anticipate and wait for a bearish candle to come in to possibly engulf something on the 15 minutes. Okay, so I'll pause the video and we'll just keep tabs on this. At this moment in time, the move has been on the euro, okay, the euro USD. Again, looking at it, 15-minute, we came down, we engulfed through here. You see that? So you go from the high to the low. You go into the 5 minutes. This is just a rerun of what you would have been doing. Down to the 5-minute, you're waiting for that return touch. Okay, the return touch came here, you can see, and there was a separation candle, which is something we need to be mindful of. We need to have this within the set rules. Separation candle because it's within the tank. Then we got the touch on the 5 minutes of the 50% discounted area. We then moved to the 1 minute. And what you're looking for of the 1 minute condition is the bullish candle by a bearish engulfing. This was the high, this was the low, this was the tag, that was bearish, bullish, but that did not engulf that, okay? So you continue. Bullish candle, bullish candle, bullish candle, bullish candle, bullish candle. However, the bearish candle is exactly the same sort of condition. Then we have a bearish candle. Then we get the bullish candle, and then we can clearly see the bearish engulfing came after it. So you'll be getting in on that candle there. There was a little bit of drawdown, 1 to 2. SL just above the previous lower high. Okay, and then the 1 to 2 lower hanging fruit, 2% winner for today. So, like I say, a bit annoyed because I have missed it, but the rules, the method, the strategy, the system, going by rules and the mechanics, 2% winner without a doubt, without a doubt. It's just a shame I missed it because I was, like I say, in the morning getting the kids ready for school is a nightmare when it's the cold winter months. However, we are looking for the CAD JPY at the moment. I am also watching and keep my eye on maybe a sweep of the Asian low and maybe a return based upon the GBP being strong and also the USD being strong. So we might get a whipsaw. We've took out the high, the Asian on the GBP. Are we going to take out the Asian low? Okay. But all eyes for me at the moment um, is on this card for a possible entry. Okay. So far we've got a 2% winner. We've went through the rules, mechanics, and the system. There would have been a 2% winner on the Euro USD. So again, if you just bear with me, I'll pause the video and I will be back in a few minutes or so. Right, okay, guys, let's take a little look at this. We can see the 15-minute candle has engulfed, okay. So I'm just going to draw a fib from that high because we took out the London, the Asian high, I should say. At the minute, we're just following price. Without the 5 minutes. So we are just following price at the minute. And what we'll do is we'll set an alarm. And remember what we need to see when we start getting a pullback on a candle, we need to see some air. So I mentioned the momentum arrow. So after the low's been made, we want to see a momentum on a candle stay within and the analogy of a fish tank is what I normally say. Okay. At this moment in time, we are currently watching this candle here and we're just following price. Okay. So we've still got 3 minutes order left on this candle. We'll see what happens with it. And then if we start getting a pullback, we'll anticipate possibly a separation candle. We can see here we are pushing lower, so we're just going to follow price as it is at the minute. Okay, so I'll pause the video. I'll be back in about 5-10 minutes. Right, so again, guys, we've got the momentum candle. It hasn't stayed within the fish tank. It has pushed. Okay, so we took a loser the other day based upon this because we got in too quick. I'm going to try and do another aggressive move. Again, this is not about being perfect at all, okay? This is about testing the system and the strategy. This is a good chance to try another aggressive move, okay? Ideally, I would have liked this candle to stay within the premium side, okay? So I'm going to go to the 1 minute. And what we're going to look for, because we're waiting for sells, okay? We're looking for a bullish candle, which is what we've got now. But then we need that bearish engulfing, okay? So, like I said, the chances are we will get struck out. But at this moment in time, we need to sort of try the variables on this, okay? So we may get struck out on this one. So what we're waiting for is a return candle that's going to engulf the buying, okay? So we've got around about 6 pips there. What have we got here for a sell? We've got I would say 8 pips for 16. For 16. What's going on here? For 16 pips. What we'll do, guys, we'll keep an eye on this 1 minute. This will be an aggressive move. We haven't quite come to engulf this. So again, we need to wait for that bullish candle. I just need to test the variables on this. Again, I wouldn't necessarily moving forward go for this type of move because we've been burnt a couple of times at the moment, but we need to get an extensive data collection. So this is the reason why I'm vlogging this kind of stuff. So just to reiterate, this here on this candle, after this one has the standing peg, okay, we've got this one's higher and this one's obviously going to be higher now. This will be an all-time, this will be a low, okay, displacement a low. We ideally should have had this candle that's active at the minute just stay within the premium side, close something like there, and then we should have anticipated after that price to do this on the next candle, then touch to make us go to the 1 minute, okay? But again, we're going to be super aggressive and just see what happens. Again, what may happen is price may actually come up and come above that. If price does do that and breaks this structure high, okay, it just invalidates the setup. At the minute, we're not in on any trade whatsoever, but there is only around about 3 or 4 pips left of the price movement before it structurally breaks that high, okay? So again, we're just keeping an eye, we're watching the price action. We come below here, well, yeah, so around here. If this comes down as it is at the minute and engulfs, we'll have about 8 pips of price action variable before it breaks the ultimate high, okay? So again, I'm just watching what's happening. We've got 7 seconds left. 4 seconds. We're coming down 2 seconds. This looks like it might actually break that high, to be fair. Because, like I said, the 80% or more, when this turns into that and you get the touch into that 50%, the momentum is in the favor of the bulls, so it may want to go further to the buy side, excuse me. We just come down, we just anticipate what's happening. So we need, remember, we need to have a green candle before the bearish engulfing. And at the minute, we've got 2 bearish candles coming in. Excuse me, so oh, here we go. This is green. This is turning green. So this is maybe a good sign for us, to be fair. 3 seconds. It's red. That's closed green. That's certainly closed green. You can see that. So we just need this candle here to be red on the next candle, and then we can maybe get in on a sell. Position wise, we've got around about 9 pips. So if I get rid of this and I change this to a 9, maybe put this to an 18. And if I up the risk on this to 0.5%, we just need this to close in the red. Risk a 0.5% on this trade. So we'll get it on the sell. We got in about there. Bring this in a little. One to two's around about there. We'll see what happens with this. Like I say, I'm expecting this to strike us out. We are just using a paper trade account. I'm going to show the wins as well. I should say I'm going to show the losses as well as the wins. what I'm expecting from this is a possible strikeout based upon what I just mentioned before. Okay, the momentum was showing a shift straight through to the 50% here. So we've upped the risk because the account was down from the other day. We took a couple of losses. So instead of going for the 1/4%, I'm going for a 1/2% risk. So if we do get any good movement in price and we do get some profits, we can look and start partialing some stuff off. Okay. So again, we'll just keep an eye on this stuff. I'm going to go from here down to here and up there would be a take partial area if we do get down there. I still believe price is going to want to push to the buy side, to be fair. The GP, the card's super strong compared to the JPY, to be fair. But we'll watch for this, guys. Okay. I'll pause the video. We'll be back in a short time. Again, if it loses, it loses. It just confirms what I thought with regards to that momentum and the 50% being touched before we get the breathable space. That's all that's going to confirm. And it just means we add that refinement into the system. Okay. So I'll be back in a short while. Right, so we can see we are nicely coming back into profit. This is a possible take partial area. Don't really want to be taking any profits off if I can help it. And I would like to come down towards this 400 area, because again, the 400 there is what would take us back into break-even profits, to be fair. So if I can come down to that take partial area, maybe take 3/4 of the trade off, to be honest. We'll just keep an eye on this stuff. Again, when we look at price action, okay, the low up to this high, we can see we've got on the way down, it may not even come to it, to be fair. We've got imbalance here. We've also got imbalance right here, just above that take partial area. This is going to be a hard target, to be fair, because what you've got is an order block there. Okay. You've also got liquidity and an order block also within that. So there is plenty of liquidity below. It just isn't going to want to come down into that. We'll go back up to the 15-minute and we'll have a look at this in a bit more closer detail. We also have a lot of liquidity to the buy side, where I had the bias coming up to here. We more or less reached up into there yesterday. However, where we are at the minute, we've got the Asian high of the other day, the New York PM, the New York lunch, and the New York AM of yesterday. Okay, so again, we are pushing to the downside at the minute, looking for these liquidity areas. So these will be where I would expect stalling points to be. I want to see price come right down into it, to be fair. Again, there's the 200. And in fact, I'm gonna take a partial now. So I'm gonna do a 420. We'll take a partial off at the minute. That'll bring some of that account back a bit. Again, there's a bit more coming down to the take partial here as well. Bring this to just above the break even. I'm going to take another partial off because that's starting to rise. So I'm going to take off 210. So we've taken a couple of £100 back from where we lost. We lost up to 400 yesterday. So I'm just doing my risk management at the minute. I'm risk free, so I'm gonna let come and tag me out. Yeah. So I'm happy with what I've got there. The reason why I took the partials this morning was basically that last entity that I had on there. If that had came down and tagged into this, it would have took out the rest of my red figures, But what we're going to do, we're going to pause the video. And even though I moved this SL to break even, I just want to see if I kept it at the SL, would we still have gone down to the 2%? Okay. Or what I have done this morning, was it the correct way to do it? I'm happy with what I've done there at the minute because I've halved off the loss from yesterday. So again, this is where risk management comes into play. So what we'll do is we'll pause the video and we'll be back in a little while. Right, so for me, it looks as if it was the right decision to do what I'd done there. Okay, we did come in to test that fair value. Price action at the moment, we can see, that's been mitigated. We can see on the sell side, we do have imbalance there at this moment, and we also have fair value there. With regards to this side of the fence, everything is pretty much mitigated. Okay, we've got there where it could come up and liquidate as well. If we come up and tag this, we're most certainly going to take out this, to be fair. That there has been mitigated nicely to the letter. We do have that order block, and we do have that order block down here. So there's not much liquidity to the downside now, in fairness. This here is like a railroad. We do have that engulfing bullish candle, so the momentum is to the upside at the minute. So this at the minute, where I controlled and took partials at the areas that I was looking at for now, has certainly been the correct decision. Yes, the account's still in the red, but again, we are in a testing phase at the minute with this. We are physically just looking to see the entry conditions, to see if these aggressive moves do have a lower level of probability where they can go to the 2%. So this was an aggressive model entry where there was no separation candle, if that makes sense. We got in, but I was still able to lay the markers down to be able to get out with small profits to reduce the account and maintain some of the capital, so to speak. Okay, so yeah, it's still 240 down, but it was 400 and odd down this morning. Also this morning, the Euro USD, there was already a 2% winner on that. Yes, we just missed it. The card is what we're on at the moment. The GBP USD, we haven't taken any kind of entry because we haven't swept out of the London low, which is what I'm possibly waiting for at the minute. But at this time, I think I'll just leave that. We're concentrating on this. You can see live price action as we see. We have now mitigated through the fair value of that, so we can get rid of that. Also, the fair value gap of this has been mitigated. We now have liquidity residing at around about that level there, which again was around about the halfway take partial point where we took one of the partials. We just need to wait and see if we come into this. There's a big level of support and resistance. You see where this high is. We're coming down and through that. It's sort of rejecting and respecting that area at the moment. So it's good to turn what we are looking at with regards to a trading model. We also look at how price actions going today. So I think this has turned out to be a pretty nice little lesson, this one, or a nice little vlog to look back onto as well. So again, we've got a railroad here, which is like the engulfing coming through from the selling. Uh, if we come down and we get a break through this, we may get a retest, then we might get to that lower low, which then would have told me that, yes, I've took partials, but the overall effect would have been a full 2% win. So that's what we're waiting on to see what's going to happen. We're going to see if we can push that a little bit further down. Like you see, we've got 20 seconds left of this candle. We've came and pushed through these areas here, which is like not a high level of support resistance. It's a minor one, but it's coming through. It's break, it's retesting, it's broke, it's retested, it's broke, it's retested, it's broke, it's retested. So it is a bit of a key level where we're at the minute. So I'll pause the video. I'll be back in a short while, guys. Okay, guys. So my overall way I approached this morning was correct. It has swiped out again. Going on what was happening. We'll take it from the top. Okay, so we'll go from the 15-minute. It's going to look a little bit messy at the minute anyway. So we can see we broke out of the Asian high. Okay, so we've got the Asian high here. We dropped it. We had the engulfing 15-minute. Okay, so we just kept an eye on that, and then price came down. We were on the 5 minutes, so we had the high down to the low. However, this is where we not so much broke a rule, it was more of an aggressive move. Okay, this right here, the high to the low, 50% here, it was touched instantly. Now, normally what that would mean is the momentum is going to be on the buy side more than the sell side. What we would normally want after we get a touch down here, we would want this particular candle where it's broke through straight away. We would want it to stay between the 50% and the zero. So that would then give us a separation candle, gives us a more high probability setup. However, because the account down here is in the red still, it was 400 and odd from yesterday. I decided to get in with a 0.5% risk to try and get at least half of this account back, or half of the deficit, I should say. So again, entry, we go down to the 1 minute for the entry model, but we were looking on the preference, and I did see it would be more of an aggressive move. So we went to the 1 minute. Okay, now when we go to the 1 minute, we identified the high down to the low touch. The 50% came in. It was more aggressive because it was very bullish. We were looking for this model, which is a bullish followed by a bearish engulfing. Okay, so once we touched that, we had a bullish here, but the bearish candle didn't engulf. A bullish here, the bearish candle didn't engulf. We had some bearishness. Okay, we had a bullish and then another bullish candle here. Okay, but you can see right on that candle there, the spinning top, you can see that was a green candle followed by a bearish engulfing. So that candle there was the entry. Okay, you see that there? That there is what these two candles are. So we got on the entry. We used roughly about half of our drawdown what we had in place, but we took partials on the way down. We took two partials, one at the quarter side and one at the halfway point. We halved off the initial risk, and then when we put the to risk free, if the rest of the 2% maneuver came in, we would have been at positive balance by a couple of dollars or so. Okay, it came back and it struck us out to break even. Okay, it struck us out to break even around about over here. Okay, with that being said, we were still from 400 and odd in the drawdown overall on the account. We took it down to 240. So we've accumulated half of that deficit back, which was good. We continue to watch what this was doing to see. Just take that back. We continued to watch what price was doing to see what was going on after it got out of break even. It looked as if it was going to make a second run towards these liquidity areas that we marked up, but eventually it succumbed to what I thought it was going to do. And it not only came back up to the break even area again, it actually come out and took this liquidity high. Okay, so that's what we were looking at in hindsight. Again, we're not hindsight. We've done it live in front of you, to be fair. Happy with what went on there. We've also got to remember when I first came on at the chart, there was a move that already came in, which was the Euro USD, and just to sign that one off again, the 15 minutes, again, we struck out the Asian high and the New York PM session high from the other day. We had the displacement come back in on the 15-minute. We went down to the 5. This one is a textbook. This one is the definement of a textbook entry. This here is where we got in on the high, the low. This here is a separation candle. This is what you need to look for a higher probability setup. We got the touch into the 50%. We take it down to the 1 minute. Okay. And what you're looking for is the bullish and then the bearish engulfing. That's the structure there. Came in straight, more or less straight after we had the touch here. Perfect entry, perfect touch, straight down to a 2%. That is the textbook model of this, okay? If we look at the CAD, because we didn't go back to the CAD, did we? Not the CAD, the GBP, sorry, the GBP. So we can see we haven't quite sort of struck out of the Asian low. We did go at the Asian high again. This candle structure we weren't happy with for to get in on an entry because it was too close with regards to when you do the fibs from like the high point down to that. It instantly came up and it's like sort of touched. We would have missed out on that anyway on the aggressiveness. But to close this off today, okay, the Euro USD was a 2% winner. Okay, was a 2% winner. And also when we entered the CAD JPY, this was a winner as well. It went down to the halfway point, which is around about 1%. So when you look at this overall, it's 3% was on offer today. Out of the 3%, we managed to extract a little bit out of the market to get the deficit back on what was in drawdown on the account. So overall, there was a chance of 3% during that London session. We marked everything up. We went through the conditions, the mechanics, the system and everything. So another successful day in my eyes, okay? What we'll do is I might have a look at the New York a little bit later on today. I don't know, because I don't know what's happening. There's a lot of stuff I've got going on at the minute with regards to Christmas coming up, and I've got to sort a few things out as well. So today, a possibility of 3%. We used that that possibility to extract at least something out of the market, and we've done that, and I'm happy with that. Okay, so like I say, wherever or whenever you're watching this, please hit the appropriate stuff to show your support, and it also shows me that that there is an audience watching this. Okay, guys. So my name's been John, Mr. Forex Fire. I shall catch you all later.